Good evening, everyone. Thank you all for joining us. While we wait for the rest of the participants to join, please feel free to download the 360 mobile app and explore its real time features like live FX rates, SOFR rates, and updates on the latest happenings at 360 and its solutions. Good evening, ladies and gentlemen. I'm Akshata Purohit, and it is my pleasure to welcome you all to the eighth episode of the 360 Business Unplugged series. This platform brings together industry leaders from across various geographies and sectors to discuss business trends and explore areas of interest. In today's episode, we will explore how the evolving relationship between banks and fintechs is reshaping finance, driving innovation, and creating new growth opportunities for corporates. Now, let me introduce the two distinguished experts who will be having an insightful conversation today. First, we have Mr. Vikram Lodha, co-founder and CEO of 360 TF, a seasoned banker with deep expertise in trade finance and technology. Vikram is passionate about leveraging technology to transform business processes, and he firmly believes in its potential to provide solutions to today's challenges. Joining him is our esteemed guest, Ms. Shalini Warrior, Executive Director and Business Head Retail at Federal Bank. With over 3 decades of banking experience, Ms. Warrior is a technology driven leader who has successfully navigated every phase of the industry. A chartered accountant, All India rank holder, she plays an important role in driving Federal Bank's digital transformation and fintech partnerships. Under her leadership, the bank is pioneering innovative solutions to enhance its technological capabilities and better serve customers. Before we begin today's conversation, I would like to invite our co founder and chairman, CA Pankaj Mundra, to say a few words. Pankaj has been a trailblazer in the trade finance world. With over 2 decades of experience, an early entrepreneur, he has a deep understanding of market dynamics and corporate requirements. Pankaj drives 360 Tech with the purpose of bridging the trade finance gap and meeting the needs of corporate worldwide. Over to you, Pankaj.
Thank you, Akshita, and happy evening to everyone in uh, India, UAE, and to my friends. Happy afternoon in Africa who have joined us for our eighth series of Business Unplugged. I'm grateful that we could continue this with same or more and more energies to continue this series to share knowledge of our mentors and senior connect who have joined us in last 7 sessions, and we have. I'm grateful today that we have none other Miss or CA Shalini Warrior, with whom I had an opportunity to work in India and the Standard Chartered. I still remember the interaction when I used to sit in 2325 MG Road in 2003 and 2004. So two things in common: Standard Chartered and Chartered Accountant. Yeah. So and of course she being ranker, glad to having her here today. We have been interacting in last few years as we started our journey of fintech as a 360 TF in 2021, and I'm glad to also share that as we were going live, they were one of the first bank, and we were one of the first person whom I interacted again with the CA Connect to see how we lead and how we grow 360 tier. So this is a very important moment for us to have her today to address our client and our patrons and learn that how fintech, be it India or globally, could partner with banks, which is very important to build that partnership. What are the opportunity? What are the challenges we see with the existing ecosystem or the ecosystem in future, with some great partnerships, some fall downs with the regulation coming from across the globe, from whether the Reserve Bank of India or the regulators across. So But let's hear, my colleague and my co-founder Vikram is going to lead. But Shalini, welcome to 360 TF and welcome to this series. And we're really looking forward and excited to have you here. Thank you, Akshita. Over to you.
Yeah, thanks, Pankaj. I'm sure everyone is eager to hear their thoughts and insights. So over to you, Vikram and Miss Warrior.
Thank you, Akshita. Thank you, Pankaj. A very warm welcome, Shalim ma'am, once again. And on behalf of the entire 360TF family, all our guests and audiences, I extend a warm welcome to you. This is, today's topic when we were discussing about it, and we said you were kind enough to accept our invitation. We said nothing better than talking about the synergies that we drive on digital, the entire digital space that we are talking about, and the coexistence of banks and fintechs. With all that is happening within India or across the world, we said let's dwell a little deep on this. You've had an incredible career spanning decades in the banking industry, right from the early 90s. You've seen the private banks becoming what they've become. You've seen the transformation of public sector banks. You've seen the global crisis. And now that you see that entire digital transformation,
Yeah.
my question is what stands out to you about this current phase of digital transformation? How is it
First,
different? Yeah,
yeah. First of
please.
all, thanks, Alan, to 360 TF, Pankaj, Vikram, Akshita, and the rest of the team. It's indeed a pleasure, honor, and privilege to be here to speak to you folks. So, Vikram, coming back to your question, first of all, you're right. There's just so much transformation that has happened in my years as a banker. And every moment stands out in some form or fashion, whether it's the global
Absolutely.
financial crisis of 2008, whether it was some of the stuff that happened with India demonetization, etc. All of it stands out. But I think the crux of it is really what the country is going through from a digital transformation perspective. And personally, for me, when I kind of left Standard Chartered and joined Federal Bank about 9 years back, when I relocated from Dubai into India, if I were to highlight the one single kind of attribute of the Indian banking industry that attracted me at that point of time, because I'd been out of India for some time, was this whole digital transformation piece. Many things are happening in the digital area, as you know. But if I were to kind of focus it on three things that I think stand out for me from where we are in this digital transformation in India. The first is the pivotal role that the government and the regulator are playing in getting this digital transformation done. Why do I say that? You look at it from a government perspective, virtually everything the banking industry has been innovating on, or fintechs have been innovating on, has been on the back of the digital public infrastructure that the government has created. Whether
Right.
it's UIDAI with Aadhaar, whether it's the work currently underway with Account Aggregator, whether it is Unified Lending Interface, the government has come in exceedingly, in a very large sense, to do what is called create for public good and make the private sector innovate on the back of it. The regulator is also playing an increasingly important role. I don't know of many countries where the central bank actually has a fintech department that is in the kind of working so extensively with fintechs. They run hackathons every year. I think it's series 4 is running right now.
Right.
They have a window of opportunity where every particular day of the week, Wednesdays or something, you can walk in at any point in time as a fintech to get your clarifications done. The regulator also has a Reserve Bank Innovation Hub, which we do a lot of work with, which is fostering the whole innovation atmosphere and attempting to kind of, digitize much more. So I think the role of the regulator and the government in fostering an innovative culture, in fostering a digital culture is pretty high. And that's, I think, the first thing that stands out for me. The second thing is there is a very high emphasis on interoperability. Not many people like it, I must admit. I mean, it tends to make you kind of, people want to be more monolithic in that sense, etc. But I think linked to what I said in the first instance, the second one is interoperability. Like I said, not many people like it, but that's the way to go forward, because you can only then make sure that it is ubiquitous and available to everybody, whether you look at UPI, where you look at what RBI Innovation Hub is doing with Unified Lending Interface, which is making it available to everybody on an interoperability step. Whether you look at BBPS, any FASTag, all of them operate on the principle of interoperability. and a very, very high level of interoperability. So the era of closed loops is disappearing, and you have to therefore learn to work with this interoperability. That's the second one that's the third is more generic. These two were for very India specific, but the third is more generic. The third one is really, I think the pace at which technology is jumping from experimental to commercially available is extremely short. And I'll give you an example of what I mean by that.
Sure.
From our bank's perspective, when we were looking at digital payments, I think we'd reached a stage where now you can do various things on digital payments. You can do it through mobile, through internet, through wearables, etc. But we had a unique use case which said, what if you are somewhere and you don't have your card, you don't have your mobile, you don't have your wallet, you don't have anything, but you still want to make a payment? And then we conceived of and launched something at GFF called Smile Pay, which is really about face authentication based payments. Your face is your identity, your face is what you carry with you. You have to have it with you at every time where you go, and therefore it becomes a tool for payments. It's like the Digi Yatra of payments, actually. That's how. And between the conceptualization of this idea and its implementation to commercially available, and today it's available with a few merchant applications, etc., very short duration. So this whole the gap between thinking and delivering has been coming down increasingly in the digital world. So these three attributes, the role of the government and the regulator, the interoperability dilemma to some of us, but more importantly, an ethos or philosophy that is there, and the fact that you're dealing with shorter and shorter time frames in which you need to deliver on capability has made the digital banking landscape in India extremely interesting and extremely exciting. So it just keeps, I think, most bankers as well as fintechs extremely on the edge to know what's happening next.
Absolutely, and thanks for bringing, summing it up so beautifully. Completely agree with all the points that you've made. The participation or the active role of government plus the regulator, and yes, the very interesting area of interoperability. And we've had so many debates, so many discussions globally on this. Um, in all this, when I hear you say this, the entire living on the edge with respect to new and new things coming out, I must say even the users have responded well, and they played a critical role in terms of adoption of these things. And the way we have seen UPI getting adopted in India has been,
Yeah.
any thoughts on that side? You see on the retail side, you see a lot of uh, inquiries, or what's been the experience from the consumer industry, let's say?
So I think from a retail consumer industry, clearly there is a very high level of interest in and to adopt digital technology. Having said that, there is a little bit of what I call a dichotomy, actually. There is a dichotomy in the industry and in the thing. So you look at us, for example, on the retail side, about 90 odd percent of my transactions are completely digital now, which means the customer on the retail side doesn't need to walk into a branch to do any of the transactions. He does them on his own using various capabilities that we have. In the corporate side, if I take the small and medium enterprises, the corporates, etc., it's probably about 75, 80%. So yes, digital adoption is high, but cash is still very prevalent, Vikram. India is
Yeah.
still a country which has cash. So it's a little bit of maybe an oxymoron, dichotomy, whatever you call it, that exists. And the reason that exists very clearly is because India is a very large country. You cannot generalize anything in India. What works in Mumbai may not work in Trichy and will not work in a Viluppuram. That's what we say. Each of it has to be treated differently. So I think that's really what the dichotomy is. And therefore, how do you bridge this and bring this closer and closer to each other so that the role of cash is increasingly disappearing is something that's keeping all of us very engaged as well as the regulator engaged. So that's how I would see it. To say that digital adoption is really high, but cash still exists. So there is still something that more needs to be done by all of us to converge the two.
Absolutely. And on that note, I can share something. I was reading today's newspaper. One of the global cosmetic brands was talking about India not as one country but as 19,000 pin codes that they were targeting, and they had a strategy for every pin code in a manner. On the cash side, I can share one experience with you. Very recently, I came across. This is a format that we long back, when we were working with Avenue Supermarket, DMart, and we were trying to explore something for the kind of cash they collect daily, or any retailer for that matter. So what I happened to visit a country, and the large retail format stores have put up ATMs wherein they let people withdraw cash free of cost, wherein they are able to deploy their cash themselves. And and
Oh,
the,
okay.
and it's a very interesting use case to look at.
Yeah, yeah,
Most efficient use of cash. So people come and
yeah.
withdraw from there, and then that's the time when it's directly getting debited from their account and moving into your account
Oh,
digitally.
okay.
It was quite interesting. But
Hmm.
having said all this, we see India being ahead of its global peers when it comes to, specifically, I can say, the payment space.
Yeah,
Uh, and I attribute this success purely because, as a country, we saw a genuine gap for the diversity, for our scale. There was a gap. We had to digitize our payment space, and we've seen the success. You see, there are more gaps to be addressed, and
sure.
anything that you can, a few of them, if you
Yeah.
can name.
Um, we've come a long way. We've come a long way, particularly on payments, as you said. Having said that, comes back again to the size of the country and the diversity. So definitely there are gaps, and I'm not saying there's no work being done on them, but I think it'll take us some time to get to where we. The first overarching point, in my view, Vikram, is, and something which all banks as well as the regulators have to work on, is digital literacy is still not as where as we would like it to be.
Yeah,
There is still a lot of gap between the urban and the semi-urban and the and as you go more into the rural side of things, the digital literacy is extremely low even now. Um, yes, they may kind of at the margin they may know how to use a QR code, but it still doesn't mean digital literacy. That's just a payment. They don't understand the concept of pins. They don't understand the concept of OTPs. They don't understand the concept of smishing, phishing, etc. So digital literacy and is clearly one gap. And unless you get digital literacy to a very high level, which means people really feel empowered by on using digital, you can really not call ourselves a digitally advanced nation. So I think that's the first attribute that I would do. The second is we are still very predominantly still in our digital area an English country. A lot of our capabilities are still English. Yes, we've
yeah.
moved on to Hindi, we've moved on a little bit maybe to vernaculars, etc. But we still haven't penetrated where we need to from a linguistic diversity perspective. As an example, Federal Bank recently, again in GFF, tied up with RBI Innovation Hub and Digital India to launch our chatbot in 14 languages using a capability called Bhashini, which is delivered by Digital India. And we've now kind of, it's got 14 languages. We've got a plan to take it to some more languages, and we're increasingly getting the adoption of it. But if you typically open a Fed mobile or a mobile banking of any of the banks, most of it would be English. So how do you bridge this linguistic diversity that exists in India would be the second gap. The third is more about credit worthiness. We are still a country that relies extensively on either statements or bank accounts or things like that to determine credit worthiness. We haven't evolved our models to use alternate scoring. There are a lot of experiments being done, some
Right.
very good ones also, but have we got to that stage where alternates are used? Again, we've started an experiment, for example. We do cattle loans in Gujarat as part of our tie up with one of our fintechs that we do. And these are called digital bovine loans or cattle loans, where we've integrated ourselves with Gujarat Cooperative Milk Marketing Federation, that is Amul.
Right.
And the history, get the history of how much milk has been produced by the cows that are owned by a particular farmer. So you get the entire pouring history and you know what's the throughput that's happening. We're using that as a surrogate to credit assess whether the farmer is able to pay for the next loan he needs to take for the next cattle he wants to buy. So there
Wow.
are some experiments of this nature that are happening. I know there are companies that are doing a lot of it in the microfinance space, etc. But traditional underwriting, particularly for the small and medium enterprises, still very much bank account based, statement based. or at the best collateral based. So how do you get to assess creditworthiness in a manner which is not the more traditional one? So that's the third one that I would talk about. The fourth is the true essence of financial inclusion is still evading us. Yes, we have bank accounts, etc. But I think, and it's also linked in some form to the linguistic diversity, to the digital literacy. I think financial inclusion still has a long way to go. Last but not the least, I do believe that we still have some way to go when fintechs can become truly profitable ventures. But that's a matter for another discussion. But I think these are some of the areas that I think we need to work on to, if you're on a continuum of digital advancement, I think we've come a long way with payments, etc. Now we need to push the needle onto the more evolved aspects of kind of digital transformation.
Absolutely. These examples are quite fascinating. I have worked on Amul case, uh, in my time on the supply chain side, and if you're able to
Uh,
solve something like this is fantastic,
yes, yeah.
and quite happy. I'm really happy to share this kind of an example. See, you see, while we see all this happening in India, in the other developing or emerging economies, you see certain case studies wherein you want to adopt some of these practices or bring them to India?
I, you know every country has its own success stories, I'm certain. And I mean, China has Ant, for example, who we can learn a lot from. United States has a lot of them, like Visa itself or PayPal, etc. I think the one that probably stands out for me a little more in the context of India, etc., is what Revolut is doing, I think, in the UK. A lot of work has gone into understanding the Revolut model and the Revolut thing. They started off as being a travel slash payments one, but has now become literally a bank, a digital bank. And I think that's really advanced the cause of digital literacy in India. So to that extent, I feel that that's probably a good example worth looking at in some more details. Some experiments, I mean, we do, for example, work with two digital banking apps like Epify and Jupiter, but I don't think we've reached the stage of being, as a country, where being a stage of where Revolut is. It involves a lot of changes in regulation, a lot of changes in consumer behavior, a lot of changes in the producer's mindset on how they reach customers. It's a lot more complicated, but that stands out for me as a potentially an
Sure.
example that, I've done some reading up on it. I keep talking to a lot of people about it. How do we bridge that gap between where we are today and what is a truly digital bank?
So they've done well and they're expanding further. We see them
Yeah.
coming in Dubai as well now.
Yes.
Yes,
Yeah.
they have done well
Yeah.
on multiple fronts. Very specifically, again,
Yes.
the entire banking ecosystem and the fintechs put together, and I'm now kind of focusing on three areas specifically. You see, where do you see this collaboration working, whether it is cross-border trade or cross-border supply chain or cross-border payments as well, because this is one area which ties up with our country's overall thought process, and we want to be a export-centric nation, and we want
Yeah.
to increase our exports. So
Mm.
somewhere we believe that these things have to now come in the fore in terms of advancement or the next phase of digital transformation for
Sure.
that matter.
So I think I'll take the three of them in different parts because I think
Sure.
there are three different aspects to it. So first, in the respect of cross-border trade, there is increasingly felt a need for banks and fintechs to collaborate with each other, whether it is in Gift City, whether it is in the domestic market, to try and see how best we can do from a cross-border trade perspective. Um, as you understand, there are the CBDC could be one example of
Absolutely.
cross-border digital currency, which could come in a large way. Right now, it's pretty limited in its scope, but as you know from the governor's statements, from where RBI wants to take it, the the central bank digital currency could be one aspect of it. The other is there is an entity that has been formed by all the banks coming together to look at blockchain as a concept, and this is like NPCI earlier, which was formed by all banks put together. IBBIC is also heading in that direction, where all banks have come together. Some challenges exist, Vikram. As you know, cross-border trade is probably the most complex of things that need to be
Absolutely.
resolved.
Ask me.
Yeah, I can tell you, I can see that. It's one of the most complex things. How do we resolve it? But I think the use of blockchain, jury's still out on some of this, is working in that direction. No easy answers. I think it'll take some more time, but it'll take some many more experiments before we know which ones can be successful. What has been within cross-border trade, I think what has really worked and is on the path for a successful thing is the aspect of payments and cost of making payments.
Absolutely.
A few years back, you would have probably been dependent only on a Swift or, something like that. But today, I think it's reached a stage where, you can do with RBI announcing the PACB, the payment aggregator cross-border, etc. There are enough avenues open where the cost of making the transaction comes down, the cost of foreign exchange comes down, the cost of a payment comes down. That will open up the economy to a large extent. If you look at, the example of a weaver sitting in Kanjivaram wanting to sell to lady who's going to attend a wedding in the US, should be able to, ONDC is enabling that. ONDC is enabling her to purchase that and make a payment for it. Earlier, it may have been very complicated to make the payment, but now, or may have been very expensive, either complicated or expensive. But with PACBs and those kind of licenses coming in, I think it's much easier. So cross-border trade, I do believe, has some more way to go. But if you subset it within that and look at cross-border payments, a lot more progress has been made on that. Cross-border trade, for us, a large part of it is now we're looking at how we can work on the use of blockchain to unravel some of these issues, and working with other banks in that thing. Infosys is doing an experiment with banks on that. Supply chain, cross-border supply chain is still virtually non-existent, I would think, right, Vikram? It's really,
I
how
can
does
share.
trades, yeah,
I can share something on that.
yeah,
We've been experimenting, but I would say we've seen some success on that side. Supply chain, as we understand, we have to have visibility of the buyer and the seller,
yes.
the anchor and the supplier,
Mhm.
and that's where as 360 TF we've been able to have visibility of both the entities and stitch them together on a common framework. And that's where we've been able to, I would say, do some transactions and achieve some success on that side. It is similar to what we have seen on the trades kind of a framework
Yes,
in
yeah,
India. Yeah, modeled around it, but it's cross-border. The nuances are very different. KYC
correct.
becomes a challenge. Sanction screening and transaction screening becomes a challenge. But yes,
Hugely.
yeah, but
Yeah, but I think visualize, as you rightly said, an international threads, I mean, that's kind of what
yeah,
I think we're all heading towards, but it will take time. I mean, some of these challenges around KYC and anti-money laundering
correct,
and, that kind of
correct.
stuff will become a thing. But I think there are many, many efforts in that direction, even including, I think, the most recent monetary policy, was it? The RBI governor was again saying, yes, this is something we want to look at a little more. BBPS, for example, is something they want to look at exporting. So there is a lot of work being done in that area, but I think it will take some time to get it. If we can get ONDC and the payment network sorted out, then at least small and medium enterprises will have probably an easier way to do cross-border commerce as well as do cross-border payments. And that's what ONDC is working towards. Yeah.
Yeah. I can tell you now there are merchants in Dubai who accept UPI. You
Yeah,
can,
that's true.
yeah.
Correct.
So it's
So,
happening. It's happening.
yeah.
We are all seeing it in front of us, and
Yeah.
I'm
So I
saying,
think payments has
yeah.
definitely Vikram made a lot more advances, cross-border payments, but I think cross-border trade has many more implications.
I completely agree with that thought process. You have to trade is a larger term now. We have to make
Yeah,
it in subsets and then see how are we
correct.
faring on each of the areas and see what is the
Yeah,
progress being made.
yeah.
But this is interesting, and I can tell you I'm just shifting a little from the payment to
Sure.
the collection side.
Yeah.
We have been working on a collection solution for exporters in India, and we've been able to bring down the cost quite
Mm.
efficiently. And
Good.
this is something still in the experimentative stage,
Mm.
but if works out well, this can be a real game changer.
Yeah.
What we see as a swift cost $20, $30, $50, depending on the customer.
Mm,
This
mm.
what we're talking about as a solution is much cheaper as
Okay,
compared to
that's
that.
fantastic.
Yeah.
We'll await more inputs on that in due course, Vikram, as
No,
it
no,
becomes
absolutely.
scale up. Yeah.
Absolutely. Ma'am, while we're talking about a lot of areas and we see there is a collaborative, approach within the fintech and the banking industry on multiple fronts, and there is a dependency. There is a clear dependency. While fintechs identify gaps, they develop the solutions independently, but they are dependent quite heavily on the banking system, especially from commercialization of the solutions. Okay. Now, the question is, and this is something that I keep hearing nowadays, and fintechs asking in a closed corridor, not in front of bankers, but I'm asking to you: do you think fintechs can survive and thrive without the support of banks today?
My personal view, I would say, is
Yeah.
it's not going to be possible, at least in the current environment in India that I see. And I've been doing some work on this, as you know, in the last few years. Um, it's imperative that banks and fintechs collaborate with each other. There's no point trying, in my view, to look at competing with each other. That's the way we've approached it from Federal Bank.
Right.
When we looked at our strategy, we said there is one option of saying we'll ignore fintechs completely. The second option of saying we will compete with fintechs. But the third option is collaborate. And after having done a fairly detailed evaluation at the board level from a strategic perspective, collaboration was what we agreed was the way forward. And why do I say that? Because it's a thing. One, I think we've got to remember that India, with again its diversity and its its large size, etc. Ultimately, there is a trust factor when it comes to placing money. At least you may borrow
Right.
from anybody, but when you want to place your money somewhere, even now you need to see that brand. You need to see that physical signage of
Absolutely.
HDFC Bank or a Federal Bank or a State Bank of India. And that's really the trust that comes from the fact that I'm putting my money there and I know it will be safe. The regulator is also increasingly concerned, and rightly so, that that trust cannot be misplaced. Ultimately, it's depositors' money. And with the level of financial literacy, with the level of digital literacy in India, combined with the fact that there's such a large population outside of the outside in the rural and semi-urban areas, banks which are heavily regulated, which are managed on a day-to-day basis, literally, will have to be the mainstay for earning. You still can do some amount of lending business, but even that, I think, is coming under a fair amount of regulations, as we've been seeing in them.
Yes.
So to me, the better approach to look at is, what are fintechs good at? I think they bring great value in terms of understanding customer experience, co-creating customer experiences with customers, hugely great on agility, fantastic on the use of analytics. I mean, these are things that with the best of intentions, banks will never be able to compete with. So they bring in, what do the banks bring? The banks bring a good understanding of regulation, knowing what is compliance, the infra at the back end to process these transactions, and the whole trust element that a customer needs. So if
Yes.
you marry the two together, I think that's the best solution, because you get the best for the customer, in my view, if they come together. And that's how we've been driving our entire fintech strategy, to say we will collaborate. We are not here to compete with each other.
Fantastic. This is kind of music to my ears, and I hope all the bankers out there in India and abroad are listening to you right now.
Yeah.
This is important, and if at the board level a bank has this kind of realization and a strategy which is being driven from the board, talks a lot about the thought process and how you're approaching this
Yeah.
entire space.
Yeah.
My congratulations on that, and this is something I'm sure this is going to change the face, and we see a change face of the organization already.
Yeah.
The
And I think we'll explore it in a little more detail a little later, because we go through a lot of steps. So I'll come to that in.
no, no, absolutely. So what are the key barriers today? When you said this for a greater fintech, for a greater adoption of the fintechs, I see already that as federal bank you made a lot of progress. But what do you see otherwise happening in the traditional banking world?
So I think the first one is, the bankers have to have a mindset of collaboration. So I think it starts from there.
You
You
use
know,
the
about
right word. I'm sorry for interrupting. It's the bankers, not the banks.
yeah, the bankers. Yeah, I think it's really the bankers. The bankers have to have a mindset of saying, okay, this is for the best interest of the customer. And it's a
Right.
mindset, it's a culture change, it's a mindset change. That's one. But that's the softer aspect of it, which needs to be addressed, and sometimes the most difficult aspect to be addressed. The second is really legacy systems. I know a lot of banks, all of us have moved
Yeah,
towards the use of middleware and all that stuff. We're using cloud where appropriate, etc. But I think it still remains a big, if I want to make a change in my core banking solution, it does take time, whether I like it or not. And
absolutely.
though I'm relatively younger in that space, but I think so. I think the legacy systems do play an important role. And while many solutions have been found for it, at the end of the day, the legacy systems do play a role in kind of constraining our ability to innovate as fast as we'd like it to. The third aspect I would say is, to some extent, while RBI has come a great way in terms of clarity from a regulatory compliance on digital lending and on credit cards, in the more traditional deposit taking savings bank current account space, there's still some areas of work that RBI themselves are aware of and they're saying they will work on. So I think there is a little bit of uncertain, maybe, not very sure how exactly that will work, because some of the regulations that we can be governed by are still pre-digital in that sense. So I think
Right.
regulatory clarity on a few things is required. Last but not the least is this whole ethos and philosophy of data security, data privacy, etc. With DPDPA coming into act, etc., there will be a lot more clarity. But right now, it's not completely clear on on data privacy, data security. But
PTBP, yeah.
I think these are items that will get resolved. If you'd asked me 3 years back, lending would have been clearly one area which was not, there was no clarity from a regulation standpoint. With the
Right.
digital lending guidelines, I don't think any of us can say there is no clarity on what RBI expects the bank to do and expects the fintech to do. Similarly, on co-branded credit cards with the April 22 circular, there's absolute clarity. And I think the rest of the items will also become clear. So these things will get cleared, but the mindset is something each one of us has to change, right? It's got to be top down, bottoms up, a vertical, horizontal, because a bank is a complex engine, right?
Yeah.
You've got risk management, you've got compliance, you've got information security, you've got operational risk, you've got finance, you've got many people playing a role.
No, absolutely. And, we find it more challenging with the bankers at times than the bank per se.
Bank, yeah,
It's the mindset of the individuals, how this is going to happen
yeah.
and how are you going to
Mm,
do it.
mm.
Uh, while you carry out this framework and you look at so many fintechs on a regular basis, how do you go through the selection process, the due diligence process?
That's a very important question. I think I'll spend a little time explaining it,
Sure.
Vikram. It's something I do extensively with my partners also, and I make it kind of clear. First, there is absolutely a need to make sure that there is what I call strategic fit. There is no point getting into a fintech partnership without being very sure what is the strategic purpose we are serving through that, or we are in it. In our case, when we looked at this as a strategy, it was very clear. Our strategic fit was we wanted to make sure we had an expanded distribution framework to reach the right set of customers. The federal brand is very well known for its ethos and philosophy of warmth in human relationships, appeals very well to the small and medium enterprise, the slightly elderly customer. But our brand was not appealing enough to the likes of the salaried millennials, the ones who maybe were born with a mobile in their hand, is what I call them. That
Yeah.
profile of the customer was not naturally inclined to a federal. And we knew through our partnerships we could reach that kind of customer base. So that was the one strategic purpose. The second strategic purpose was the fact that we were our return on assets as a bank was not as high as we'd like it to be, because we were very heavily skewed in favor of secured lending. We had home loans, we had loans against property, we had small and medium enterprise lending, which was collateral based, etc. We didn't have a credit cards, we didn't have a personal loans at that point in time. So we said, listen, when we get into this business, it should be in areas which can expand up our return on assets. So the first point I'm making is that before getting into a partnership, ensure that there is a strategic fit for what the bank wants to achieve. Otherwise, you will start with some experiments which will not last. That's the first thing. The second is we spend a very large amount of time, I must admit, me at my level as well as my team, on making sure there is a meeting of minds between the founders and the bank. We like to kind of spend time with the founders, understand where they're coming from, what is their thing, and we want them to think compliance. We want them to not see compliance as a burden, but see compliance as an integral part of the journey to becoming successful. And therefore, you know, I must say, we have sometimes founders who come to us with potentially little or no idea of what regulatory compliance is about. That scares us a little bit because it's got to be joined at the hips. We can't do regulatory.
Absolutely.
So the founder and the mindset is the second one we look at. The third is what is the problem you're trying to solve? We sit with the fintech to say what is the customer problem we're trying to solve. Sometimes, yes, you can experiment, etc. Absolutely. But you've got to be clear in your mind what is the problem that we're trying to solve, and is that problem a tenable problem that needs to be solved? Because bankers have limited time, banks have limited capital, and therefore we need to make sure that. So once we've done these three things, we actually take our partners through something called a partnership evaluation scorecard, Vikram, something
Sure.
that we developed internally, and it's open and transparent to our partners. It's not something we keep hidden. It goes through various propositions. What is this customer value proposition? What is the likely financials we're going to see, et cetera, et cetera. And we arrive at a potential decision of whether we go ahead or not. We actually have something called a FinTech steering group, which is chaired by our MD and CEO, which meets every month. And every partner is a go, no go decision is taken at that level. The reason we take it at that level, and we take it for even the no-goes, because we want to be clear that we're not missing out something. So it's a multifunctional group of people who get together, and the concerned relationship manager pitches the case, and if it is a go, we then take it forward. So we do that entire evaluation. Once it is a go, we then get into the next level, which is then becomes the more technical stuff, like what are the commercials, what are the APIs and the BRDs and the systems and the process, and all that kind of stuff, the due diligence audit that is to be done. So we do all that, and then we go commercially live. But after we go commercially live also, we actually have rigorous reviews every month with our partners. We actually sit down and do a business review. Where it is a lending product like a personal loan or a credit card, we do a risk review, which is a credit risk review. And where it is a savings bank kind of product, which is like what we have at Epify and Jupiter, we do an anti-money laundering compliance risk review. So we have these reviews on a monthly basis, and literally go item by item as to what is working, not working, what course corrections need to be done, what should we change, what are the kind of complaints we are seeing from the customers, what's the Play Store rating, are there any observations? So it's a rigorous process. It's not something we can do flippantly, and probably that's why Federal Bank is kind of at the forefront of a lot of these fintech partnerships, because we've invested in that capability. I may be the only bank that has actually fintech partnerships as a business department, distinct from the organic side of the business. They report into me, and they carry the KPIs for making the partnership with fintech successful. They carry KPIs which are balance sheet KPIs and P&L KPIs. So we've come on this journey of fintech partnerships. We're well entrenched in that journey now, well embedded in that journey, and we are able to work with multiple partners at the same time.
This is, I can't express in words now. This is seriously music to ears, and this is so fantastic and lovely to hear. I go back in time a little, and this was immediately after the ING Kotak integration. That was a time when the threads had come out, and all the three players, and we were the first bank in the market at that point in time to onboard all the three, and also tie up with all the supply chain programs out there. This was very early in the day.
Yeah, I can imagine this was.
This was, but it was done not at that point in time. Yes, I had the go ahead from Manian was the boss at that time, and he said, okay, go ahead. But I can tell you, this was done not very structured the way you are doing right now, but the thought process was the same, that you need to collaborate with these guys and go through the process of working with them throughout the journey. What I found very interesting in the entire framework that you spoke about I have seen globally, when I can share this with you, a lot of organizations have put in place, banking organizations, quite a thorough process of onboarding, bringing a fintech in the system. But the entire review process is something that's missing. What you spoke about, a rigorous review, something really nice, because that's where you actually see whether this engagement, this partnership is working or not.
Correct. Correct. Yeah.
And the fact that you set up a separate fintech team altogether who's responsible for the success,
Yeah.
my congratulations to you. Seriously,
Thank you.
this
Thank you.
is quite thoughtful and very, I would say, ahead of the industry at this juncture at least.
Thank you.
So this has been fantastic as a discussion to hear it from you and see so many things happening and bringing it together in a short span of time that we've been together with you.
Yeah.
One last question from my
Sure.
side. I have a
Yeah.
lot of um aspiring audience today also in the call, and these are the people who are uh, about to join a fintech or a bank, or they've just joined a fintech or a bank. How do you what kind of advice or professional advice you would give them keeping today's world, today's environment
Yeah.
in mind?
So the one thing I start by saying is, and it's sometimes sounds easier than it is how does each one of us develop a mindset of learn, unlearn, and relearn? So sometimes we do a lot of learning, but sometimes we forget that we've also got to unlearn some of it. And when we're working with fintechs, I'm talking as a banker. When I work with fintechs, I have to unlearn some of my stuff. I have to unlearn some of the way I looked at, technology architecture, some of the other stuff. I've got to keep learning what the new regulations are, but I've also got to relearn some of it. I go back to basics sometimes on KYC. I go back to basics. So I think the mindset's got to be learn, unlearn, relearn, and continuously do that. And today, I tell my team members, I don't think you have any reasons to say it's difficult to do that. Enough in the public domain, as long as you choose it carefully and work it out. There are enough of other, work where you can do it. So I think that's the first thing that we, continually out having a mindset which says, I will learn, unlearn, and relearn continuously. The second is, and, I think we've got to be very disciplined. Sometimes people believe that you don't need to be disciplined when you want to be innovative. I think they both coexist with each other. You have to be innovative, but you've got to also be disciplined about it. You've got to know what steps you follow, particularly when you're dealing with customer money and these kind of things. You're working with a bank. You've got to be disciplined about what the steps you're following and how you're documenting those steps. So discipline is an attribute which we pay a lot of credence on and which we put a lot of weight on. The third I would say is resilience. I mean, there's no point. I mean, there will be hiccups. There will be instances when things don't work the way we want it to, either for the partner, for ourselves, or for both of us. There will be probably customer complaints. There could be issues. I mean, these are things we have to take in our stride. So we've got to be resilient and develop to some extent a tough skin. Learn from it. Make sure it doesn't happen the next time, and don't be afraid of failures. I know of many experiments we have done which have not really worked. But am I scared of the next experiment? No, I just put my thing, learn from it, and move forward. So those are what I would say as attributes that we need to develop. I'm not talking about the more technical stuff of knowing UI, UX, customer experience, all that stuff. But I think these are more mindset related stuff.
Thank you. To all the youngsters out there, discipline, resilience, and do not fear failures. So
Yeah.
that's the key takeaway. So thanks a lot, ma'am, for being with us. And before we end the session,
Yeah.
I have a few rapid fire questions for you.
Okay, this is
Just
the
for
scary part of it.
this comes as a surprise now. Um, the team did this and said, we'll not let Charlie ma'am go without a quick rapid fire. So here we go. Okay. Belts tightened. Okay. Nadal or Federer?
Fedra, any day.
AR,
Discipline being, yeah.
AR Rahman or RD Burman?
AR Rahman.
Retail banking or corporate banking?
Retail banking any day.
Early riser or a night owl?
Early riser. That's what I am.
Fantastic. Masala chai or a filter coffee?
Filter coffee. I belong to the south of India. Proud of my. Coincidentally, actually, I think we have a daily newsletter in the bank, which
Okay.
just tells us about things that happen every day. So
Sure.
today, for example, is 107th birth anniversary of our founder, the late KP
Wow.
Hormus. So today was a big, there were lots of celebrations around that. So we
Wow.
have something that comes out every morning, and it's titled actually Filter Coffee. It's the
Beautiful.
morning cup of coffee for our staff, so it comes out first thing in the morning about yesterday, what all happened. But
Beautiful.
notwithstanding that, I can, filter coffee is my go-to drink.
Fantastic. Next one is podcasts or books?
Books. I
Books.
am not much into podcasts, I must admit. Yeah.
Kamala Harris or Trump?
That's a difficult one. That's not, I'm not going to say. The call has been recorded, so I'm not sure what's going to happen. So I'm not going
I understand and I'll leave it
to.
at
Yeah.
that. Thank you. Thanks for a wonderful session, and it was a pleasure having you on the
My
eighth
pleasure.
edition of Business Unplugged. I'm
Thank you.
sure our audience enjoyed. We enjoyed it thoroughly. Lots of words of wisdom that we take back with us, and a lot of learning for us as a fintech ourselves. The way you've been looking at the industry and what all things we have to do. I'm sure all I can tell about myself and Pankaj, we have a lot of work to do after today's call.
Happy
Yeah.
to work with
Yes.
you guys. Yeah,
No, thanks, Alini. And anytime if you're visiting Dubai, Jaipur, or Gift City, do
sure.
let us know. We'd like
I think
to.
all three come in some form and fashion. Dubai, many of my friends tell me Dubai is my second home because I lived there for 5.5 years. I love
Yes.
the place, a lot of friends, but I'll definitely look you guys up. Vikram, you're in Jaipur, is it then?
I'm sorry. No, I am in transition now. I'm moving my
Okay.
bases to Dubai.
Okay.
Yes, we have a large office in Jaipur. I would say my heart is in Jaipur because I love the team there. It's a young team, and you must visit. You will
I
love the
must, I
energy.
will, I will. I'll
Yeah,
definitely make a note of it. Is we've got a presence in Jaipur,
I'm
so
sure. Yes, you do. Yes.
yeah.
Yeah. So we have some questions,
Sure.
Akshita, from
We
the
can take
audience.
them from.
Sure.
Yeah. Yeah, thank you. Thank you to insightful speakers for sharing their wisdom with us. So before the session, we have received few of the questions from the corporates and banks. I would like to take that up first, and then we'll be moving forward to the audience questions.
Sure.
Okay. The first question we have is, what do you believe are the next big innovations in the trade finance technology that will benefit both corporates and banks? Are there any emerging technologies that we should be paying attention to?
I think we covered some part of it in some of the questions that Vikram and I spoke about. I think the next best piece should be on whatever we can do, either with blockchain or anything else, to just ease the process of by which documentation flows are, and how do we make cross-border payments smooth and less expensive, actually, more than anything else. If we need to increase the exports of India as a country, the small and medium enterprises will have to get onto the bandwagon. If they have to get onto the bandwagon, margins being what they are, cost of payments will have to come down. I think these will be the areas. There's a lot of work happening in that area. I think Vikram himself referred to a TREDS equivalent for international supply chain finance, correct? So if that happens, you can just visualize it. I think TREDS has made life so much easier for a lot of MSMEs in India, and international TREDS, if I can call it that, would make life so much easier. So Akshita, that would be my point. Still lots to be done in that area.
Thank you, ma'am. The next one is, in the light of increasing cyber threats, how are banks and fintechs working together to ensure the highest level of security in cross-border trade transactions, especially as more corporates adopt digital solutions?
Um, to a large extent, RBI itself themselves are working very, very closely with banks to make sure that cross-border payments are heavily secure. I honestly think the recent regulatory regime of PACB, payment aggregators cross-border, goes a long way in ensuring that only the right players get into the business and they're duly regulated. Personally, don't see that being such a big issue. I think over the next few years, a lot of work will get into that area. I think digital frauds are more rampant, honestly, in country rather than they are in cross border. Cross border is a little more difficult.
Okay, thank you. For corporates working across multiple geographies, how can fintech platforms help navigate differing regulatory environments in trade finance and ensure compliance without added complexity?
Without added
Added
complexity.
complexity. Right.
It's see, that's going to be a little difficult, I would say. I don't know, Vikram, whether you have a better answer than I do for this one, but I think the cross-border regulations, each country is going to be a sovereign in themselves and will want to kind of protect their own interests. So there will be some regulatory norms, and I think it's rather than trying to find, I think it's best to adopt it, learn about it,
Absolutely.
adopt it, and move ahead. If you intellectualize it too much, you'll never get anywhere.
There's no easy answer to it. Each country has their own set of regulations, and we have to learn those. There's
Yeah.
no shying away from it or moving out of it. We have to do it. The only silver lining in this and in the cross-border space is if you operate under products like letter of credit. A good part with this instrument is it is read and understood the same way across the world, across the banking system. So there is, this is completely harmonized. So if you understand letter of credits, you understand, the language of your buyer or sellers on the other side. Yeah.
Thank you. Next question we have is, as banks increasingly adopt fintech solutions, what are some of the challenges in maintaining trust and relationships with corporates who may vary of moving away from traditional trade finance methods?
You just what is it that corporates should look
No
out for?
worries. Yeah. As banks increasingly adopt fintech solutions, what
Yeah.
are some of the challenges in maintaining trust and relationships with corporates who may vary of moving away from traditional trade finance methods?
So people are worried about moving away from traditional. Is that,
Is that the question?
Yes.
yeah.
Yeah, so
Yeah.
I think, Shalin,
Yes.
this is basically that as a bank movement, you say from a simple branch banking to a internet banking, which was a
Mm,
transition.
mm,
The moment you
mm,
say that this is a solution which we're providing in partnership with this fintech,
mm.
as a customer, still I may not have that much of trust in the
Okay.
fintech,
Okay.
and I still want to be in traditional. So how do you handle that with the corporates? Yeah.
Okay. I think it starts with a large amount of customer education, Pankaj Vikram. That's what I would think, customer education and building the infrastructure in such a way that it creates trust. I think the internet banking is a good example. The way trust was created was by ensuring that you had duly authenticated protocols to enter the platform. Then you had an OTP where required and all that stuff. So you build step by step to create that trust and thing. I think a lot of it will come from customer education, right, Pankaj? I mean, I don't know what else we can do. You have to handhold the customer through the process, right?
Even if you, now that I hear you, even if you talk about your due diligence process, that itself is giving a lot of
Yes.
confidence.
Yeah, I
And
think
at
from
least to
a
me,
bank
if
can
I,
give a lot of confidence. A bank
yes,
can give a lot of confidence to customers. So even in our, I mean, leave cross border, even when we do credit cards, personal loans, thing, regular products, we give the confidence to the customer that listen, your money is safe because it's with Federal Bank, and we have gone through a very in-depth due diligence process. Our brand is associated with every page that you see, every statement that you see. So it's our brand there. So you trust us, we will do the rest of the heavy lifting.
Thank you. Ma'am, as you talked about the learn, unlearn, and relearn thing, we do have a question from one of the student who says, what are some extra skills one can learn during graduation or post-graduation period to get prepared for future fintech jobs?
The ones that I would really emphasize on the technical side of things would be a very deep sense of understanding of analytics and how to use data effectively, because fintechs live in a world where there is a lot of data. You've got to know how to use that data effectively. I see a lot of people who do a lot of analytics around it, but then hardly any insights and worse still no actions. So I say, listen, this is not data analysis paralysis. You've got to get to, yes, crunch the data. That's a precursor or a necessary thing, but that's not sufficient. Get your insights from there and get to the actions place. So I think a very good sense of analytics will help. The second is a very high sense of understanding of what really makes a customer tick. So in being able to understand how to do research, how to gather the data from the research and approach it with that kind of data driven research will help. That's another skill set that I encourage our youngsters to look at. The third skill set that I encourage when I look at people joining me as a bank, but also in any of our fintechs, is, and this is more, I think it's more softer in that sense, have an open mind. Don't be stubborn with your ideas. Don't be fixated on a few things. Have an open mind because there's so much happening out there. You've got to imbibe it and be ready to change.
Thank you, ma'am. Yeah. Pankaj, if you would like to take up the audience questions.
We
Yeah,
have, I think we can take a one or two maybe.
yeah, I have very interesting one, of course, which is of course come as a question as a feedback, but just perspective of the banks investing in fintech and which is also correlated to when we talk about the trust. And I know Federal Bank is one of the most, I would say, aggressive bank in a lot of partnerships and this thing where you see Shalini here and from again coming from the audience and otherwise also that do you think the and at times the sometimes the fintech is being colored with the bank investment. So for example, it is an investment done by a federal bank and a fintech. How the other bank perceive this, where also this fintech serving to the other banks, whether there's a conflict of interest where a fintech as equity has been injected by one or two banks and the fintech has to work with the other banks. That is one. And do you also think that investing in these fintech solidify the relationship with the banks and bring that more governance and the trust from the customer perspective?
Surely investing in a fintech will obviously give it a greater stamp of approval, in my view, a stamp of kind of thing, because no investment is made without adequate due diligence. And once the investment is made, then the question really is, are you captive? Are you making the fintech captive to yourself? I'm talking from a banker's mindset right now. I don't think it makes sense for a banker to invest in a fintech and then make the fintech captive to the bank. Then you might as well make your own department, right? Why do you do that? That's not the right thing to do. Now, how do you ensure that? I think at the core of it, what is a bank scared about? The bank is scared about the fact that this is my customer. Will somebody go and cross sell something else? Will somebody go and sell another product to him, poach the customer, right? I think at the core of it, that is what is probably in the minds of the thing. And there, I think, is where the things like due diligence come in. How do you build the Chinese walls in such a way that they're duly segregated and quite well articulated, as well as well implemented from a systems capability standpoint? If you're going to go into investment in a fintech with a view that we'll make it captive to yourself, your investment will not play out. So you've got to keep it open for everybody else, but build the Chinese walls in a very disciplined fashion and do your due diligences every year thereon. Yeah.
Madam, last one, with the growth of Gift City, and especially from the NRI perspective, what initiative, whether it's opening of the account or of course uh, technically what we understand that the IFSC will also allow non-Indians to place deposit or open account with Gift City. Do you see, of course, collaborating the cross-border fintech, which may not be present in India, but they may have this customer base. Let's say a fintech having customer base of a retail customers in US or in UAE, who may be prospective customer for Federal Bank or any other bank sitting in Gift City, where a Emirati from UAE placing a deposit or opening accounts. So how you see a prospect from where you want from an India perspective, do you really see that mobilization of
Oh,
funds?
absolutely. Yeah. In fact, something we're working very closely with our Gift City branch, Pankaj. Obviously, in the first phase, what we've looked at after initially, as you know, Gift City was for corporates, then they opened it up for retail individuals. So our first focus has been our Indian customers wanting to invest abroad. How do we get them to open accounts with us? And we have a process in place for that. We do a large part of referrals from our branches into Gift City. The next is what you said. How do we get, for example, we have correspondent banking relationships with Mashreq and Emirates, NBD, etc. in the UAE. If they have a certain customer profile who wants to participate in the India market, then how do we get the whole KYC done, etc. So that part of it we're working on at this point of time, Pankaj. But we do believe there is an opportunity in that area because everybody wants to participate in the India growth story. And as long as the due diligence is done, as long as we know the customer very well, we know the source of funds, we know the income, and we've done all our due diligences, we should be able to do it. This is not going to be a mass market kind of thing, Pankaj. We know that for a fact. It's going to be a very niche kind of product and a niche kind of customer segment too. But there is work underway on that.
Thank you. Last one, Charlie, that is from me. We talk about the youngsters and the new generation which we talk about. There are a lot of initiative being taken in US and the other market where anybody about 12 could be open account and so on and so forth. Now, where you see a fintech playing a role in soliciting or serving the young generation, which is between, let's say, year 12 to 21. And do you also see there's a huge, great potential with that segment from the future retail banking perspective?
To your answer, yes, there is a huge potential in that area, no doubt about it. I think they are the generation that's going to come in the future, and I think you can literally play a role in their entire life cycle. So the way it starts off with is first you start with some amount of just savings, for example. The new UPI capability that was introduced, Pankaj, is also for this, the UPI delegate, where you can, delegate your son or daughter or somebody to make certain payments. So you get them started with that. You get them started with a basic bank account. You get them started with a basic card, with a basic UPI capability, and then you take them along the cycle of, your first car, your first home, the usual customer life cycle. So there is clearly a segment there. There is clearly a proposition there. There is clearly a thing. The economics of it is something, Pankaj, we have to be prepared to understand. Economics of it may not work out initially. And therefore, to that extent, as a banker, I also need to be ready to say, yes, the economics of this are such that I can't expect it to pay dividends for me in the next 3-5 years. But if I work with this young boy or young girl through his life cycle, I should be able to make money over the lifetime value. So as long as we're cognizant of that, there's clearly very good propositions at each stage of his growth, his or her.
Thank you. I think that's from the my side and the audience side. We are good to close, but now thank you once again. So Akshita, over to you.
Yeah, thank you. Thank you everyone for answering the questions. For those who joined us late, we are glad to have you here. If you haven't already, please download the 360TF app to access real-time FX, SFR rates, and connect with LC issuing banks. Thank you. Thank you for joining us. Thank you,
Thank
Shani
you, Shali
ma'am.
ma'am. Thanks a
Thank
lot. Thanks
you.
for your time.
Great. Thanks a
Thank
lot
you.
for your time. And thank you very much to the entire audience and the team that helped put this together. Vikram, Pankaj, and the rest of the team. Thank you very much.
Thanks, the team at Federal
Thank you,
Bank
and
as
Thank
well.
thank you.
you.
Thank you.
Take
Bye,
care.
everybody. See ya.
Bye-bye.
Yeah, bye.
Wishing everybody a happy Diwali in advance. Thank you, everyone.